My final concern is the risk of a surge of inflation and its advance warning inflation expectations. Now understand, this is not part of my forecast, but the concern is that unwelcome price developments could limit the Fed's ability to provide policy support for a gradual recovery. As the global economy has moved into recovery, the prices of energy, metals, and other raw material commodities have risen. These market movements have led some analysts to fear greater pressure of pass-through of commodity price increases, which could add a cost-push dynamic to the inflation picture. While some categories of prices have gone up, aggregate measures of prices are indicating disinflation, not rising inflation. For example, yesterday's Consumer Price Index report indicated that retail price growth remains in check. The overall index for the last 3 months rose 2.3% on a year-over-year basis, and the core, which excludes food and energy prices, the core was up just 1.1%. Additionally, large amounts of resource slack have given businesses little pricing power, and underlying wage and price trends have continued to ease. Our directors and business contacts across the Southeast have confirmed anecdotally this view on current inflation pressures. Despite the lack of evidence of current inflation pressures, some have expressed concern about the potential inflationary consequences of the Fed's very aggressive monetary measures taken in response to the financial crisis and recession. As a result of those measures, the Fed's balance sheet more than doubled in size. Discussion among market participants and Fed observers has focused in recent months on whether the Fed can engineer a policy exit, that is, an optimal shrinking of that balance sheet. Much planning, market testing, and consultation has already been performed in anticipation of an eventual exit. I am very confident the Federal Reserve will be able to manage the normalization of its balance sheet with appropriate timing and pace, and I do not expect inflation to change the course of economic recovery over my forecast horizon. So far, the public seems to agree. The stability of long-term inflation expectations, in my view, is signaling confidence in the Fed's ability to conduct a successful exit from stimulative policies.